Hello, it is the 6th of October 2010, and this technical analysis video will have a lot of good information regarding this current rally that we are seeing. Even some silver bugs are starting to say it's up too much. It's at 23, over 23 right now. It wasn't long ago that silver was in the range of the 18, 19, $17 range, and well, we even had $8 and $9 less than a couple years back. But is it up too much? We see that this daily chart going back since the late 60s, is breaking out of this range. Now, the scaling of dates may not be the most accurate after all. The difference from 1990 to 95, from that to 95 to 2000 is off, yes, but the data is what was given by LMBA on their webpage for the silver fixings. And the pattern I am looking at, an interesting little pattern here, is the bowl shape pattern. This is the support of this bowl, and we can see how it's rising up, and the resistance part of this bowl is something in the area like this. And we're still a long ways away from the top part of that bowl, which right now looks to be nearing the $32 a level mark. And I've talked a lot about $32. Well, here's the reason why. $4, this range from the $4 bottom and this $8 double top area from here was the significant resistance that it traded in throughout the 1990s into the early part of the 2000s. Its first breakout level was to here. Then here, then here, then here. Which is interesting because you have this Fibonacci level. It should have found some resistance there, maybe probably come back to here, maybe correct sideways through time, but no, it just bursted through it. And that's normal within Fibonacci. When that happens, you expect to go to the next one, which it did. It finally corrected back to the support level and worked its way up towards this one. Price correction through time. It's managed to come towards top part of this level. It's corrected through time for the last few months before this breakout, which means the next level is that of 32. That's a Fibonacci sequence number. And when you look at the price correction throughout the entire chart, this is what we see. A down move. Price correcting lower within the range. You have a huge bull run. Time consolidation followed by a huge bull run. Price consolidation, which really ultimately ended up within another price correction within this range. Corrects through time, rally, correct through time, rally. And from this chart, this breakout is only beginning. Only beginning, because we are just getting by this resistance point. Were we up too much here? Was it up too much here when it was at $7.89 an ounce on its way to 50? Is it up too much today at 23? Earlier this week, I put up a chart on the inflation, the CPI inflation at that. That's the chart silver should have looked like, not including any supply and demand issues. Supply and demand issues would have made it look worse or better depending on what those issues were. And some might say there's manipulation making it too high here. And they might be right. They might be right on that. Question is if they were right and the market would work freely, then the support here at 15 really should have held. Maybe they find support at this area, move up here, maybe have a little small range for a little bit, and then boom, a price explosion. But that never happened. silver, when you take the price it historically has traded at throughout the 19th century and even the 18th century, of $1.20 offhand. I don't have the numbers in front of me at the moment, but it was around $1.25. And based on those inflation numbers from the CPI, without supply and demand included, silver should be over or at the area of 100 per ounce. And this moved lower when the dollar or the inflation was going higher. If this was a pure true move, that means the supply and demand got murdered on silver. Because not only did they lose against the dollar, but they lost on the supply demand to a negative value. For the dollar index doubling or tripling should have meant silver doubling or tripling, but that did not happen. So the manipulation ended, in my opinion, right in here to bring the price lower as it did here. Because if they are manipulating it to go lower now, they're failing. Maybe they're suppressing it. That's not what I'm stating as far as the end of the manipulation. But in order for us to clear the manipulation that has been done, based on today's variables, we would need silver to be around the $100, maybe $200 mark. I don't know what that level would be, but we would need to get to that level for us to erase the manipulation. And by the time it gets to 300 or 400, it might be back to even because of the inflation that would kick in from now until that point. But for now, this candle is breaking out. 32 does seem very likely within the next 4 months. Now, what I have here is the SLV, the silver 15-minute line chart. I've adjusted these prices a little over 2% more for the COMEX fixings price. And I have a little indicator on the top of the screen, and the indicator is the ascent or descent of the 5-day moving average. The 5-day moving average being this green line here. That's the 5-day. And it's been staying north above this blue line. I'll get more into that in just a little bit, but that's very strong. And what I was saying last week and on the weekend's video is that the 5-day moving average was working as your support level in here, fixing all those levels. I said you didn't need to put a trend line here because the 5-day moving average would do it for you. But here's the problem. Well, it's not really a problem, but it might be for some people, is that we've had a price explosion, or a small one for that matter, but enough where this 5-day moving average is going to start to rise more, and thus the straight line is going to be moving above this straight line. Because it won't take long, like maybe we'll have the 5-day moving average up here and this trend line up to 22 something if we have a nice explosion to the upside. Therefore, if we have any selling, then this would be a support level later on. Breaking that, then it's the one below here as possible support. But that would be another day if there's any evidence for that of a sell-off. Right now, there's no evidence whatsoever. We've broken this uptrend line. This is day 2 of the breakout. It has consolidated very nicely in an upwards motion since breaking this level. It's doing very well as I speak, a little after 2 p.m. at the 23 mark, just consolidating and doing well. But this chart here shows the ascent or descent of the 5-day moving average. As long as it's above the blue line, you'll have a rising 5-day moving average. If it's below the blue line, you have a declining 5-day moving average. But these numbers show how much they're going up or down compared to its previous level. For example, in here, markets were going higher, although the rate was mainly a correction through time. But what was happening was the 5-day moving average was slowing its rate ascension. And same thing here. but it stayed above this 0%, which is strong. But this is what I find exciting. One, the breakout happened within here. This consolidated through time, and within this trend, and that created a move like this. It's very rare you get a pattern that looks like this. But the break of this trend line got us a big move in here, and what looks like that of a bull flag. A bull flag is nothing more than a time consolidation. This consolidation period is this upwards trend consolidation. Therefore, I wouldn't be surprised if this indicator managed to get up to this level here, which would mean silver up to 2380, 2370 as a very likely possibility. And I was saying earlier about the Fibonacci. When you break big levels without much resistance, expect the next ones. And that's what's happening right now. The mass of the Fibonacci levels, of the big ones, we're pretty much within this range in here. This was the area of the most important Fibonacci levels. No resistance, none. Nothing to write home about, that is. And when you tear through resistance areas like this, then you expect the next ones to come. And like 20, which really wasn't that much expected resistance on anything but the shorter term time frames, the same is true with 23. There isn't much, but at 24, there's a lot more within the Fibonacci value. So I would expect the move to make it to 24. If it doesn't, then you would get a bull trap or that of a failed move. A failed move, the failure would be the break of this trend line. That would result in going below here and then maybe finding some key support. But until that happens, we'll wait and see, adjust to what the message of the market happens to tell us. But this pattern here to me seems very, very bullish. And as I've said just momentarily ago, or just a few moments ago, we should be over 120, 130 based on supply, demand, and inflation. The 80s, the 90s was a period in which silver got clobbered as the money supply tripled, quadrupled, whatever the figures were over those 2 decades. Therefore, you're seeing silver at 23. I ask you, is silver up too much?